on-chain. Hey, on-chain revolution, Bitcoin not an illusion. Market recap, then I do a roll call. You're not bullish in the vocal. Look at the price action, yeah, send it to the deck, sell it through the stack. Ordinals the best. Too much Bitcoin, gotta go to read. If you end up bearish, gotta put the knee pad. Let me see the comments. Look at the fear and greed index. Bridge, look at the chart.
Welcome back to On-Chain Revolution. My name is Shizzy. On the channel, we cover the entire Bitcoin and crypto ecosystems. What is up, guys? An amazing show for you guys today. This is a little different, though. It's very special. Our good friends are at Artura asked us to kind of give a feel what traders are thinking, what traders are doing. We want to actually start looking more into trading and leverage and really educational stuff, right? And that's what this one's going to be about today. We're calling it the Trader Spotlight, brought to you guys by Artura.finance. Artura, they're going to be on Hemi. Hemi is actually backed by Binance, and it's going to be awesome because, you guys know the deal. When a token when a chain launches, they normally don't have a token. And if you play on that chain using something like Artura, you can possibly get an airdrop. And that's something that we're trying to push our community to do here. Play on Artura, play on Hemi, and actually just start learning how to trade. And you can do that today. And so we will start by bringing in my co-host here, as always, Mr. Yagobi. What's up, buddy?
What's up? What's up,
man? So we're doing this trading special. We're really trying to push the narrative of education, right?
Yeah, I think it's really important. And, education with leverage and being responsible, but also just getting the basics down, right? And one way we're attempting to do that is just getting some experienced traders on, right? And just getting to know them, maybe trying to pick their brain a little bit, see what works with their strategies and what's made them successful. And today we have the pleasure of having Landy on from the Bitcoin ecosystem. And it seems to be a seasoned trader. So I'm excited to learn about his strategies and what, makes him successful.
100%. Like learning from others, right? Not having to make the same mistakes others have made already. If you can just learn by talking to somebody, by understanding their past, understanding why they're successful at what they do, you can actually get an edge rather than just keep making the same mistakes and blowing up accounts, right? And that's what the series is kind of all about. So without further ado, let's bring up Landy. Landy, welcome to On-Chain Revolution. Thank you so much for being here.
How you doing, Shizzy? Yagobi? Glad to be here. Yeah, it's trading is a passion of mine, and education is actually a passion of mine as well. So I'm happy to be here, joining you guys in this special series.
Awesome. Yeah.
We can't wait to hear about. Good.
I was just gonna say, it's exciting to kind of have someone, in the ecosystem that we've covered for so long to jump on and share some of these trading strategies and experiences and stuff. But kind of what we always do first is get into your background. If you wouldn't mind maybe taking us back a little bit into how you found yourself as a trader, how you got into it, and maybe your experience in crypto and trading altogether, if you don't mind.
Yeah, so I've been trading for in total about 25 years, and I spent the better part of 20 years or so trading on and off professionally. I started actually in the finance world through the insurance side as a young 16-year-old. It was my first job, and through that I met some people in markets, and I had a mentor bring me under his wing, get me into actual sitting at the desk and trading. He had his licenses, so he kind of walked me through how to trade. That turned into a market making job. I worked my way up, and then kind of floated all around the financial world, but really held on to the analyst side of things, primarily in traditional markets. Of course, there was no crypto at this time. We're going back a very long time ago, but I got to experience a lot. I saw the dot-com bubble burst. I saw the 2008 to 9 financial crisis, some turmoil in the mid-aughts as well. Before kind of coming around to crypto and specifically Bitcoin, I was aware of it in really, '09, and really started to get involved in around 2011, and it changed my perspective on how the world works after having been in markets for so long, doing various things, whether it was trading, market making, setting up different deals. Um, and I became a little jaded with the way that the financial system worked. And when I learned about Bitcoin and what the ethos was behind it, I ended up diving headfirst into it in around 2011. Been here ever since, trading crypto. Still trade traditional markets on the daily, and I trade crypto every single day.
It's crazy. First of all, I don't think we've actually talked to someone with this type of like trading background, and we have talked to a lot of people that have that experience with trading crypto. But you being starting off at that young age in traditional markets, so have you traded across all traditional markets like forex, like even to like options, puts, that stuff, margin, all that stuff, like speculative assets, all the way to like more conservative, all that stuff? Or were you more focused in one part or the other?
I was more focused in, well, I mean, I've traded just about everything. So, I mean, it kind of runs the gamut. The options market and options trading was very heavy. Making markets was primary, and then business deals in the financial sector was um, kind of my mainstay. Kind of made my career, as I kind of floated around. The when you're at like a prop shop, which is just a financial firm, and you're trading or making markets depending on whatever the task is. um there's the way that you get paid is, there's commission and bonuses as well as your base pay and like all that kind of stuff. So working your way up, you start to get to a level where you get into the more of the deal making side of things. So going out and
Mhm.
finding clients, right? And that's kind of where my bread was buttered. Um, but I also got into training, and that was, it ran the gamut for FINRA stuff, but I focused primarily on teaching trading systems and really boiling them down to their basics so that somebody could find their trading style. And that kind of led me to education. So kind of a hybrid with kind of one foot in the financial world, one foot in the technical world, because a lot of things were changing at the time. The dawn of high frequency trading hadn't yet hit yet.
Mhm.
And different financial applications. We were in that transitionary period. And when I say transitionary period, like not necessarily ticker tape parade days, but we were in that period where we were starting to utilize different technologies in trading that helped assist us. And so I got cross trained on everything as well by my mentors over the years, and I got a chance to experience a lot of things and really see how all the pieces were put together. So, while I stayed in the financial side of things, I ended up in education as well. And that was actually the most rewarding part of my career, before retirement. Which, by the way, crypto is what led and really helped me solidify my retirement. But you know, it was an interesting cross training. So I became like a jack of all trades, master of not necessarily none, but master of just a few. And I really enjoyed the educational side of things because I was, we'll say, successful in my trading style, and I wanted to impart that on others, the way that they imparted that on me.
Yeah,
Love it.
100%. I would love to know what you consider like you mastered. What do you think that you are you excel at?
Really chart reading and trying to project where we're going to find zones of interest and liquidity. That was one of my feathers in my cap. And that's, that kind of extended over into charting specifically. And because if you are not as adept in charting, it makes it very difficult to create a trading plan that's going to be successful. And my ethos is if you have a really solid chart and a really solid system, then you can define the criteria of where you want to see price end up. And then you can have your trading plan with some simple checklists in there for what you want to see. And when that checklist is met, you take the trade, whether it's a swing trade or a scalp trade. And I kind of put them in two buckets. One, of course, is going to be a longer term trade. One is going to be an intraday trade. And from there, there's criteria that I want to see set in a specific zone of interest to the upside or downside to take a long or a short. And then that's either going to start out as a swing or it's going to be a scalp. And, then there's criteria for turning scalps into swings and stuff like that.
That's crazy. I like just hearing you talk. I can tell you developed your criteria very deeply with your education part of your career, which is awesome. I want to go back a little bit because you brought something up that I talk about a lot. I'm sure Shizzy's gonna be like, yeah, he always brings this up. Was the .com bubble burst, right? So obviously that I look at that, even though I was, I was around, I think 1980. I was kind of telling my age now, but I was younger at that period, but I wasn't really involved in the financial markets. But remembering what I did remember the little bit, it reminds me a little bit of kind of what we're going through right now with all the speculative like meme coins and all these things. Obviously, there's a difference, but the pets.com and all these ones that were supposed to be huge, they died off. Do you see a similarity between that period and where we are now? And maybe if you could break down what you see, if there is a similarity from your perspective.
Yeah, the similarities are that when drawing like the correlation to where we are in crypto specifically, there's a lot of very similar things, and that is we have a lot of chains, and then of course we have a lot of tickers that are on those chains, and there's a lot of different chains that do very similar things, right? And that's where we get into protracted arguments between communities of, well, our chain is faster and our chain it has this thing that it does better than your chain or whatever that might be. But at the end of the day, most all of the chains and even Bitcoin as the OG that's well established. I kind of put Bitcoin in its own category these days, especially after the CFTC and SEC rulings for the spot ETFs and kind of the bucket that they put it in. It's kind of Bitcoin, and then there's everything else. I mean, there's smart contract functionality on Bitcoin as well now, but it's not directly on layer one, but layer one adjacent that's being built around that. So, but everything else is primarily smart contract based, right? So we have our base tokens, right, that are powering those chains that are acting as the payment and for transactions on the chains in most cases. You have your DeFi ecosystems. We have our meme coins, and we have our NFTs, right? And every chain just about every chain, every major chain has some version of these things. So in the .com era, we had a whole bunch of companies that were doing the same things and all racing to be the one that captures the most mind share and the most liquidity, right? And we now have a whole bunch of different chains that are in a race to capture the most mind share and the most liquidity with their technology. Just like in the .com era, we had innovators in technology and differentiators for each of the different technologies. But at the end of the day, there's only a couple that can survive, right?
Mm-hmm.
And we're in that stage now where, if you're to project, if we just kind of hypothetically think, maybe 10, 20 years down the line, well, there might be a lot of chains. I don't think that they would necessarily go away. they'll still stick around, but you're going to find winners. And what are the winners going to have to do? They're going to have to specialize. They're going to have to advertise what it is that they do best, right? And they're going to have to dominate at what they do best, because just about every on-chain technology is capable or will become capable of doing many of the same things that other chains do. So if you're going to be the best gambling casino chain, then you need to be the best gambling casino chain. If you're going to be the best compute chain, you need to be the best compute chain, and you'll have the cream rise to the top, right? If you're going to be the best RWA chain, well, just about every chain can do RWA stuff. You're going to have to be the best. And I do think that we're going to have, not necessarily that other chains will go away, but we're going to have, different categories where we have chains that specialize in the things that they do best. And then we're going to have a whole bunch of cross-chain compatibility. And I think that's going to be where, it's going to be wherever we're going to have concentrated liquidity within that areas with a lot of cross-chain compatibility, where the smaller chains are going to have to become those micro caps.
Yeah, no, I 100% agree. 100%. I'm curious of your experience with DeFi, decentralized finance, and maybe some trading in DeFi. Do you play with that at all?
Yeah. So I mean, I'm involved in just about every major ecosystem. I'm also attached to a project that is part of a Bitcoin layer 2 DeFi ecosystem in Hermetica.
Oh wow,
So
stablecoin.
yeah, stablecoin. Yeah, it's there's a lot in DeFi. We went through the whole DeFi cycle. Everybody introduced to DeFi last cycle, right? And now DeFi is becoming even bigger because of the things that happened with the BlockFis and Celsiuses of the world. Not your keys, not your coin. Still remains, true, but you have much more flexibility, not going to a centralized player like that, giving up your assets without any knowledge of what's happening on the back end there, as you can in DeFi ecosystems with monitoring what's going on chain. But I have a lot of experience participating in DeFi ecosystems for, of course, borrowing and lending protocols. And then, of course, providing liquidity to various DEXs, and whether that's single-sided or double-sided liquidity, concentrated liquidity, whatever you want to call it, and different methods for participating in DeFi ecosystems like that, and the DeFi loop. But also DeFi trading and DeFi perps is something that I've been very interested in for a long time. I've tried out many different platforms. And, there's some that have come much earlier and aren't here anymore, but they did pave the way for others to learn from to create really cool DeFi DEX, perp DEXs. So I actually prefer perp DEXs over centralized exchanges. At the end of the day, it comes down to how much liquidity is there, right?
Yeah. Yeah. So I was going to ask you that question actually. So, what are some of the reasons why you prefer, a DEX over a centralized perps platform like Binance or, MEXC or something like that? What's some of the reasons why you prefer the decentralized route?
Well, and this is to say that, I do trade on centralized exchanges, obviously. I go where there's the largest pools of liquidity. But the reason why I prefer the DEX route, and I'm happy to see and participate in perp DEX ecosystems growth, is because you can't trust a centralized exchange. I know that, they can do the Merkle tree and like all the different proof of reserves and funds and like all that stuff. I don't trust it. If it's not on chain, I don't trust it. And we can see things moving in and out, but we don't know what kind of deals they do on the back end for rehypothecation of assets. Of course, we know how this worked with FTX. So a shining example of, if you've been around since the Bitfinex days or even earlier, FTX was just a reinforcing example of centralized exchanges. Maybe, they're convenient. They have a lot of aggregated liquidity. They got a whole bunch of listing pairs, but at the end of the day, decentralized, the whole reason we're here is to kind of get away from central authorities, right? Centralized authorities in that case, not but not to keep perpetuating that. They're going to exist and I will still utilize them. There's obviously on-ramping and off-ramping through many of them, but we have solutions for that now for decentralized exchanges and perp DEXs. So, we have solutions to this, and I'd prefer to go to the route where I have the least amount of risk, um, and the maximum amount of control that I can have to get done what I want to do.
Yeah, I 100% agree too. Because like you see some scam wicks sometimes on these centralized exchanges, and they don't always match up, right? You'll see a scam wick over
Yeah.
on Binance, and then look at that same chart on OKX, and you're like, wait, it didn't happen over here. Something's fishy. And then that one Sunday morning, I think it was like 7 coins just just dropped, right? I don't know if it was
Dumped.
Wintermute or whatever. They completely dumped 70, like 60%. And you don't really see that in DeFi, especially when you can take a whole bunch of different APIs and kind of put them together and kind of so you're not like depending on one exchange or one, market maker to
Oracle.
kind of Oracle. Yeah, exactly.
Yeah. I mean, the big thing with this, what it does come down to, even on centralized exchanges, they have a large pool of liquidity that they can pull from the stable side and pair it with those pairs per contract of whatever teams want to do the deals with them to do the initial funding. And then the rest has to be, quote unquote, natural growth of those pairs on the exchange to flesh out that liquidity pool. Because they're not going to, unless they're sweeping and listing, they'll allocate a pool of liquidity to pair with whatever that pool of liquidity would be matched up with, DEX oracles and indexes. But at the end of the day, it all comes down to liquidity pool size, right?
Yeah.
And if you go on an exchange like MEXC and you look at like a smaller coin that launches there, and you look at the liquidity pool and it's got, 20K, it's really 10K of liquidity on the stable pair and 10K liquidity on the coin pair, right? So you got 20K, let's say, on a newer listing. Those are really easy just to go in and sap the liquidity pools, even on centralized exchanges. But they have they have a pool of USDT that's common that they can just pull right over to. In decentralized perp DEXs and exchanges, you're subject to what the liquidity pool has. But if you have, cross collaborations between liquidity pools, then you can emulate the same things, and they have to think out better ways of protecting that from getting sapped, right? So
Yeah.
they have to work much harder and take extra steps for security in order to enable safe trading to prevent those things. Also, you're subject to a lot of B booking. Look, I mean, they're using their AMMs on, and anybody who thinks that they're not B booking and taking out the other side of the trade on you on centralized exchanges. Well, I say this a lot, but I've got some beachfront property in Montana to sell you.
Yeah, I'm sure that there's a lot of stuff that's happening like that with the centralized exchanges. And one thing I really like about the decentralized perps DEX is you can participate in the liquidity providing liquidity and earn passively as well. So they have that option, as well as skipping the KYC. Of course, that's convenient and it's easy to get started. Referrals are very easy as well on perps DEXs. But I'd like to get to some of maybe some tips we can give to the audience. Maybe we can start at a basic level here. Like for you as a trader, how do you start whenever you're trying to look for some potential runners?
So, for me, as somebody that's been around in crypto for a long time, I actually avoided a lot of the smaller cap stuff for a while until it's more established. But I've got a bit of a degen side as well. When I'm evaluating, let's say, newer tokens, newer launches, we all know about the pump fund stuff, and of course, there's some analogous for pump fund just on just about every chain that you go to now, for easily launchable coins. First thing I look at is if it's I'm not usually the one that's on the pump fund, right? I'm not usually the one that's buying that pump fund style token. I wait to
Yeah.
see what's happening, right? Like, okay, so I evaluate a token. I'm looking at the holders. I'm looking at snipers through various tools, and there's a whole bunch of really good publicly available tools. I look at the socials and try to determine, hey, is the team real? Is it just another launch? Do they have a social presence? What is the wallet size? How much how much is there in each wallet? What is the big whale wallets? Has it been bundle sniped? All the different criteria that everybody generally looks for, just basic stuff. And then once I determine like, hey, this thing, either all the snipers got out of this thing, it maybe ran a little bit and it went in through holder distribution. Once it sells off, is the holder base growing? Is the wallet count growing? All right. Does that look natural? Is there I do a little bit of on-chain investigation. Does it look natural when it's coming back down? Once it finds a base of support, I typically will take a look at, wallet count growing just as a basics. What's the volume that's coming in? Is it coming down to a level that it had previously found a low on in lower term timeframes, or a high on and work high to low on the way back down? And then I'll determine like, okay, does it have some social heat on it still? Is the wallet are the wallets growing? Where's the volume at? Because typically when things are new, and if I'm catching a quote unquote runner, I'm being pretty degen. I'm trying to be fairly early to a token, or I'm searching through to find a gem that might be catching a little bit of heat socially, and then determining like, when it pops up and the volume starts to die down, you're ready for a drop. Typically with those, it's a bit of a different type of analysis that I'm going to do on something like Bitcoin, Ethereum, Solana, the big majors, because they're much more established, much wider holder bases. But you can get a lot of X's out of runners. Most recently, I'll give you an example. Fartcoin has been the meta. It's all about Fartcoin. It's the hedge against all the market dropping. That's been the funny narrative, right? And so one of the things was it came down and bottomed out on a weekly on a pretty important level. And I took a look at the level. I looked at the holder count growing at that level. It got a nice little pop on lower term timeframes and held it. So I went in and I bought it, and it ran. It ran, locally. It didn't look like much if you're on log scale, but locally it ran off that weekly low, and did quite well. And the same even with the more recent basis for everyone token. It sold off very hard. It was obviously bundle sniped, and when it hit a low, there's a lot of people still talking about it, both positive and negative. And I don't really care if it's positive or negative. If I see the wallet count going up and I see some stopping volume coming in, there's more volume rushing in than there is sellers, I get in. And it went for a couple of runs now, and then is kind of dumped out a few times. So kind of get in on that. It's very difficult to work my normal method into that. So it's a lot of hybrid fundamentals, taking a look at the chain, what's going on chain, and wallet counts and volume, and less about, the trend, support and resistance, volatility and momentum, which is my 4 keys that I
Yeah.
typically talk about.
Yeah, and what about like events though? Like, because I feel like runners, a lot of times people will just only look at runners as like going up, trying to catch a heater. But like an opportunity event to me also is like a big token that's about to have an airdrop, like Barachain. I know there are a lot of people who are looking at that saying, "Hey, I'm going to short this because we knew this airdrop's coming," and they do like their analytics with that. Do you ever try to look for opportunities like that to short, possibly?
Absolutely. Yeah. Well, when you have airdrops, it's all supply side pressure. So, typically you're going to see a run up in and maybe some front running of any current holders. If it's something that's already been dropped and is going to have an additional drop, or you get something that is being dropped new. What you have is a constant supply coming in as people get their drop and go to the DEXs, or if it's a sex listed token, then they can go to the centralized exchange or whatever it might be, whatever method they're getting as the drops come in, you can see that supply side pressure is gonna, you'll get the initial pop up because there's very little supply and a lot of excitement, right? So you get that nice rise in price, but as people get more and more of their drops, then that supply side pressure starts to really overtake the new the new buyers coming in, and it's always a good short. Magic Eden was another one, by the way. Then you
Today,
have stuff like that, yeah, right? Like that thing popped up to like $20, and I was like, this is an obvious sell. People are still claiming their airdrops.
Yeah.
So like, as soon
What
as
if
it
you
hit really high volume,
What if you ran a conservative like a conservative swing short on that whenever it was at like $5 and everybody thought it was going to go to 20 because of hyperliquid, and you waited
yes,
this long? Like it's at like 70 cents now. That would have been huge.
yeah. I mean, it's interesting because when it actually, I did my claim, and did they have a short on that? Was there a way to short that at the
There
time?
wasn't at the time.
I don't
No.
Oh, there
remember.
It
Yeah,
was
wasn't.
like
so
2
that
days
one there
later.
wasn't. So like, so Jupiter, obviously you can take long and short.
Yeah.
And so whenever there's like whenever there's airdrops, it's always, it's the same kind of thing. It's supply and demand dynamics. And it's very difficult. It's the same with new listings on exchanges. So or a bridge to if you're wormholing a token. I'll give you a good example. From the Bitcoin ecosystem, we had Dog. It's a rune, right? It bridged to Solana, and it saw a big rise in price, but that rise in price wasn't mirrored on layer one. And the reason why it wasn't mirrored on layer one, various reasons, no liquidity pool, but it didn't keep parity even with the index because there was a limited pool of liquidity. And as people are transferring over their coins, you're just getting one side inflating, and that one side was the Dog side. So you saw there's, that set pool of liquidity over there for the wormhole of Dog and Sol, or it's actually is it a stable pair over there? It is a Solana pair. So you have Dog in the Solana pair, and that's a set pool of liquidity once it's wormholed, right? So as buyers are like, oh, hey, I want to buy this thing, price starts to rise. So you're getting more Solana, less Dog in the pool. And then people are transferring over like mad. And also now it's out of parity with one side on layer one. So people are buying and transferring. So the Dog side of that potential sell side pressure keeps increasing. And then all of a sudden they sell, and you got more Dog coming in and more Sol going out. So, it's always the same thing. And this happens with new listings for centralized exchanges. You can look at the Pengu, you can look at all of them, right?
Yeah, it seems like every single time there's something new, there's always a trader taking advantage of the situation for sure. A smart trader, anyway. I have a question. So, with something like Artura launching on Hemi, right? So let's just say I was a new trader and I'm looking for advice, right? I'm potentially looking for an airdrop opportunity. So I'm like, you know what? Let me take some money over there. Let me start playing on Artura, and let's see if I can make some money while I airdrop farm, right? What would be some advice for you if someone just getting started, not really, maybe I read a book, maybe I watched someone on YouTube, but not too much experience? What would you be some advice for that person?
You go with the majors first. Your Bitcoin, Ethereum, Solana, you go with your majors that have the
Yeah.
most liquidity, and check the liquidity pool size, right? So the majors are, with any kind of perp dex, the majors are going to have the most liquid anyway, right? So that's where you go first, and that's where you want to experiment. And if you're new, you experiment in small sizes. If they have paper trading available, you paper trade until you figure out what kind of style you want to go with. Observe the chart, and do your research on that particular perp dex and how it operates, because every perp dex is going to be a little different with the tools and options available to you, for long and short, for limits and stops. And those things are always handled a little bit differently from perp dex to perp dex. I would always suggest you go to the majors, You take a look at the liquidity pool size, and you either bet small to start, or you paper trade to start while you're learning.
So let's just say I have $1,000. I'm okay with losing, right? Because potentially I can get that back in airdrops. I take that $1,000 over there. I don't want to lose it, but I'm okay if I do lose it. And that's kind of push that. You know, if you take it over there, you have to be okay with losing it if you're newer. But like, so how big of a position should I take, and how much leverage? Obviously, you know, I'm sitting there, I'm waiting for my opportunity. But like, what's some maybe some advice for that person?
Well, I mean, there's the degen in me here, and there's the teacher in me. So the degen in me is like, go over there. Hey, you want to go long? Go long, baby. 50x,
Love it.
50x long that 5-minute chart, and see how. No, realistically, I would say, if somebody's going to go over, I would always say, if you're going to do anything, to start with while you're learning, and you're okay with losing, you at least want to experiment with the platform. So if you got $1,000, I would use lower leverage to start, and pick your spot, right? When it comes to, make sure that you've done at least the bare minimum analysis on trend, so you understand what the trend is, so you can identify the areas of support and resistance for zones of interest to the upside and downside, and then however you're going to play that, you play it, right? But I would always advise starting out with lower leverage. A lot of newer traders start out with very high leverage. They go the 50, 100x, 125x route. Well, that's great if you know what you're doing, and you're fast in and fast out of those trades. I mean, you're not going to hold a swing. I mean, maybe if you get lucky, you can hold a swing trade at 125x. But even in the lower term timeframes, you might get wicked out, and it still runs runs the way you want it to. I would say always use a stop. Make sure you have a stop set, and that
The stop, no matter
always
if you
use a
trade.
stop. Yeah.
And
If
what would be percentages in that stop?
I don't really work off percentages
Okay.
per
You
se,
work
but I
out.
would say,
Yeah.
in terms of risk profile, it would be the
Gotcha.
normal, 1 is to 2.5 or whatever you'd want to call it. My stop is depending on, just generally speaking, if I'm in a zone of interest, if price gets to a zone of interest on like Bitcoin, for instance, um, I will use an example of Bitcoin held up in the range, was going, sideways, kept dipping in below that, right around
Support
that
levels.
92, right? There was a zone of interest right around 89 to 92 for Bitcoin for a while, even on the way up as it was forming structure, right? Then, when it dipped in there, now it's in my zone of interest. I go to the lower term timeframes, and then I start picking my spot, start identifying the criteria that I want to see. If I'm going to put my stop, and I'm going long, for instance, my stop is usually going to start out, lower than the last low that I'm working off of, right? Just a little bit lower than the last low, maybe a percent or two or whatever it might be, based on where I'm identifying price to get to for my take profit targets, and I typically stage my take profit targets, in 3 or 4 stages, depending on how I'm working on that particular day, or my confidence in the direction of the chart. And, for stop loss, I always have it, and I will move it. So if I take profits, typically, either my first or second take profit, I will move my stop up, depending on the look of the chart. If it's still kind of shaky, I'll keep it where it is. Maybe I can always refill the position, or, if it comes back down below my entry or something like that. But in most cases, once I've hit my first or second take profit, I move my stop to break even or in profit. That's just been a mainstay of mine since trading in the crypto markets for years now, many years, and it hasn't failed me yet. So it's taking a stop and a profit is always a good one. You don't want to have a take profit wiped out. Now you're at a break even kind of thing.
Yep. And when you bring up, like, stop losses and take profit, some people have trouble with, being satisfied with like a 70% win rate, right? Which I know, like, a trader is probably like, that's great. Like, because they're just kind of like, they'll win, lose. They don't want to lose, right? That's the problem with them. What do you feel like is your like satisfactory like win rate? Like, what is something that you feel satisfied with?
I have an insane win rate, but that's
Oh
because of the
wow,
way that I trade. Yeah,
yeah,
I'm in the 80s, but that is because of the way that I
Ooh.
trade. I'm a
yeah,
conditional trader. So I don't, for instance, I also switch between scalp and swing if I need to. I pick my spots very, very carefully when I'm trading, even in lower term time frames, which means that I give up some opportunity on that as well. And it's not even about the win rate. It's about how much you're banking at the end of the day, right? You can have a 50% win rate, but if you're banking hard and you're not, if you've got a 50 or 55% win rate, if you're taking smaller losses because you have a stop loss, and then the wins on the other side are, leveraged maybe at like, you got a 2 or 300x out of that trade, you're sitting pretty. It's about P&L at the end of the day. It's not really about win rate.
true.
I have what I feel is a lot to protect, so I make sure my win rate is high, meaning that I'm going to trade less, right? So I do trade a little bit less. I have gambling. I do gamble, but that is purely in one section. It's more like the meme coin kind of gamble stuff, right?
Gotcha.
Um, but I'm a conditional trader, so I have to have all of the conditions met before I take a swing. Or I don't just look at the chart, sit down, and say, okay, this setup at this particular time of the day right now as I'm sitting down looks juicy for a long or a short. I'll sit
Yeah,
down, and whereas another trader might go down to the 5-minute chart and say, I can scalp like a 25, 30, 50, 60x out of this and really in a really tight window. I don't really do that. I'm more of a I'm waiting for price to, for instance, on Bitcoin, pick a direction. It's been consolidating sideways for a couple days now on closes. Yeah, it's swung around a little bit, but it hasn't offered up much in terms of volatility, which I'm a volatility trader. So I'm
yeah,
waiting for compression to expansion, or mean reversion after expansion to, like what we saw, a big expansion down in traditional markets and then a mean reversion back up to retest the breakdown, right? Like same for Bitcoin. The big breakdown from the range lows between 89 and 92. Once it started closing below 92, skated right down on the close. It had dipped in there, but it skated right down, hit that 78, bounced right back up, and then tried the area again. Been getting front run at 89. So like I'm patient. I'll wait for that trade. If it looks like a setup, once it gets there to meet my criteria, then I'll evaluate going short, right?
yeah.
Because I'm already in a swing long from the support side of things. I'm not usually going to sit down and just go, I'm ready to trade right now. Let me get into this candle.
Yeah, so you're someone that has discipline and you never force yourself into a trade. Which honestly, for the audience that's listening in, if you can't get there, you got to get there because I mean, you're hearing it straight from an experienced trader himself. I mean, he's been doing it since he's 16. That's called mastering your emotions and being able to realize what a winning strategy is. So that's awesome that you've gotten there, and I hope I can get there one day.
I
Yeah.
did a whole lot of losing before I learned how to win. Trust me, dude. Guys,
Yeah.
I took knocks, and luckily I had really understanding mentors at the time because I royally screwed up. Yeah, no, I'm emotionally dead inside. This is what happens when you trade for too long.
That's very common. I hear a lot of really, really good traders say, "Dude, if I told you how many accounts I blew up, you would be blown away."
Yo,
But
bro.
well, really appreciate your time, man. I could listen to you talk about this all day long. Absolutely amazing. Thank you so much for giving us the time. And I would love to give you a few more minutes to kind of talk to our audience. Maybe come tell them where to come find you, or anything you like to get out there to the audience.
Sure. Yeah, I actually you can find me on X at Crypto Landy. I'm pretty active on there, and I do technical analysis. I upload videos Monday, Wednesday, and Friday. very Bitcoin focused because Bitcoin does, it does in general determine the direction that the rest of the crypto market's going to go. But I do actually, I have been incorporating upon many people's DM requests to incorporate Ethereum and Solana into the analysis. So I do touch on that. Those are after market close Monday, Wednesday, Friday. You can find me on many spaces. You can find me on David Gockstein's morning show. You can find me on Nobu's Pump Radio. Dave's All Things Crypto with Dave Cool and Nat. I think you might be familiar with Dave and Cool and Nat. I think that's where I met the team from Artura. And it's I'm always around. If you ever want to reach out, you can always hit me up in DMs. Usually I'll answer you publicly. I do get overloaded with DMs, but if you have any questions or want to chat, you can hit me up in DMs.
Yeah, man, you're at 9,600 followers on X, guys. Let's get them to 10,000. We really appreciate your time, man. Thank you.
Thanks, guys. It was fun. It was great talking to you.
Appreciate it.
All right.
We'll talk to you soon.
Man. Wow, man. Another very successful show. I love talking to traders, man. It really blows my mind how patient these people are. Like, you can just tell by like his voice how patient, and he probably is like one of those traders where he's like he might like miss out on a lot of trades because he's like so patient, but when he hits, he hits.
Yeah. Exactly. And what really got me was his just extensive experience going all the way back from when he's 16, right? And he went through the ringer of learning and, went through the dot-com bubble, the 08, 09 financial crisis. So he's seen all of that stuff all the way leading up to like even the risk on environments of TradFi too, And so that's really cool to talk to somebody like that.
Dude, when I was 16, I was freaking riding my Huffy. Like I wasn't intention.
I was working at Jack in the trade. I was counting fries. Did I put the right amount of fries in here? I wish I had that job though, learning to trade that early.
Hell yeah. Another amazing show. Let's get out of here.
Exactly, guys. So make sure that you guys are checking out Artura Finance. They are going to be launching on Hemi Bitcoin Layer 2, which is backed by Binance Labs. You're going to be able to trade synthetic Bitcoin fungibles like Sats, Ordi, Doggo to the Moon, $1 Billion Cat, one of my favorite Bitcoin runes, as well as XRP, Tau, Ethereum, Solana, those popular blue chips as well, guys. So make sure you're paying attention. Also, be a part of using their platform because they will have a TGE in the future. Super exciting stuff, guys. Make sure you visit artura.finance to learn more.
Yeah. And in the meantime, guys, check out their X account as well. Make sure you guys participate. Like, you come here. They always have some amazing updates. This is how you're going to get updated on when launches and everything else. Make sure you guys are following Artura Finance on X. But if you guys wouldn't have a few more minutes and wouldn't mind checking out OnChainRevolution.io, you got some of the best articles dating all the way back to last year. If you know someone just entering the space, please send them our website. We really feel you can help them get started and code up to where we are. If you guys need a VPN, we got a NordVPN. Definitely check that out if you need one. Everyone should have a VPN, guys. Everyone. There's free ones out there. But if you're okay with paying for the best, it's like $3 a month. So get yourself a NordVPN. And if you guys are going to Bitcoin Vegas, it's going to be fun. It's going to be exciting. But do not wait till May to get your tickets. Get them as soon as possible. You guys can get them on our website. Really, really appreciate that. And merch. If you need merch for that event or any event, click our store tab. That'll take you to our Shopify, our third-party Shopify. We supply the amazing logos, and they do everything else. Order Revolution shirts are limited time. If you're an OG, you're rocking one of these. We're actually taking them down in May, so get them while you can. And if we ever see someone rocking an Order Revolution shirt, you guys are minimum getting a free beer. And we're going to show our appreciation for free. But thank you guys. And just guys, remember, we are live Monday through Friday, 11 a.m. Eastern, 10 a.m. Central, 8 a.m. Pacific, and 3 p.m. UTC. Check us out all week, guys. And until Monday.
Peace.
OnChain revolution roll call. market recap. You're not bullish enough, no. You're not bullish enough, no. Look at the price go, Bitcoin control. Why you still coping? Price action rolling. Don't fall for bear trap. Swapping indexes and putting it up in the sex. I can take profit right now. OnChain is where I be now. You can never look back. They don't want you to know. How do the market react? Fear and greed gotta adapt. Now we bridging the tokens and arching the network right now. You know how crazy we are. Nookies are savages now. They know how crazy we are. Chain abstraction, main attraction. OnChain revolution.